After a strong bounce in the markets, we look for the opportunities now and also what to look for as the next trades start emerging. Gary Glover is the one guiding us through. So good morning, Gary. How are you?
Yeah, no, I'm good, Chris. I'm good.
I was asking you off air and I'll throw it to you now that we are recording. How are you for tomorrow's meeting, presentation in Adelaide?
Yeah, no, all good. So, kind of covering something which we've been working on personally for about 3 years. So I shouldn't really sort of be, I should know the topic. So, but yeah, it's, like it'll be interesting sort of putting together really, because it's just a collation of sort of, again, probably more so the Friday sort of stuff there is looking at relative strength, but it has sort of conveyed to the overall market there too. Kind of rather than trying to pick lows all the time, we should be really trying to look at stocks that have done a bit of building, maybe had a strong run and maybe just having a bit of a pause. So that's the sort of high probability and bigger moves. And yeah, I was thinking about that relative strength this morning, Chris, as well, just as an exercise. I mean, if anyone out there, if you look at the new highs and new lows each day, just do that for a month and see how many names that just keep, the new highs will just be probably 78-80% be the same companies as the previous day. And
yeah,
so and the new lows will be the same. They just, it's funny how stocks that just keep making new lows continue to keep making new lows, and the stocks that are making new highs continue to keep making new highs. And that's conceptually sort of what relative strength is. So, so we really want to be sort of trying, as much as I do go looking for value, particularly for blue chips and portfolios there. Some of those, you start to see, the trend emerge and then have a bit of a pause. That's probably the, that sort of first or second high or low there. They're probably the safer places to buy, kind of where you get some momentum as well. A bit like the zero. You think about even the 0, 1, 2, 3 pattern. You've basically built a bit of a base there. There's quite a few stocks that I've bought near the lows here in the last year, only to sort of see them go sideways or build for a few months. And if I just waited a month or two for them to build a few high lows and come in later, like probably, even though I may not have got the same entry price, I would have spent a lot less time in the stock and I would have got 90 to 95% of the gains anyway.
So your average daily gain would have increased.
Yeah, so rather than sort of sitting there for 2 or 3 months waiting for it to do very little or build slowly, you basically sort of coming in for the meat of the move. So you let it build for 2 or 3 months and then sort of coming in later. So yeah, it's a hard concept to sort of get around here, but that's with experience and more timing here, I definitely feel like I'm sort of shifting towards more in that area there, and I'd probably encourage everyone else to look at that as well.
Well, I'm glad you mentioned that, because I do have a couple of questions about the shares that you put in this week's report and how they stack up from the basing, the relative strengths, but we'll get to those in a second. The portfolios on screen, you've got a bit of an update that you normally give there about sort of what you're seeing. So the market did pull back. It has sort of bounced a bit over the 3-week period that we're looking here on the NASDAQ chart. Is there anything that you add on top of last week as to what you're kind of looking for, possibly a bit of a massive movement for the next few months? Anything to change there, or it's sort of...
Not too much. I mean, the portfolio, Chris, I was probably, I think, it's picked up at 15% now. Still another month to go here. I was like, it was almost a part of me is like, just lock that in and take a month off and lock that in for the year. It's not a bad gain for the year. I feel like I've been pretty lightly invested probably for the last, at least 3 or 4 months here, just because I've sort of been a bit worried about the messiness of this market here. But it just goes to show you, the market's been fairly resolute. Held up pretty well. It hasn't had too much weakness there. We really only had that one sort of 8% sort of drop in the market, and since then we've sort of held on. And I thought we'd probably get a B wave here and then roll off there, but the B wave's been a lot stronger than, particularly the last B wave. But that was pretty mild. They took it, the volumes are pretty light. It was sort of set up ideal for a C leg down. This is not sort of setting up ideally there. It's been a little stronger. It's gone a bit deeper into the range. So it's gone a little higher, and the volumes have been probably a bit more constructive as well. So not sort of showing the type of weakness that you might normally see. So that either lends itself to, possibly seeing the low, how we build again, or more likely we'd probably go through maybe more of like a sideways consolidation. So rather than sort of see anything too deep there, because we're not really looking for big corrections this year. We're just looking for a little bit of a pause, a bit of a pullback in that sort of mid-year. So maybe we're going to go sideways there, like 60-year cycle. I think it basically expanded, pulled back, expanded slightly higher, expanded slightly lower, expanded slightly higher. But, so it did broaden out, made a broadening higher. So could do something like that. That's definitely a possibility there. Or maybe we just do, maybe we go through a bit of a sideways orientation breather here as well. So the volumes are lending itself to probably a little bit more strength there. But, there's still, there's pockets of the market, our market, Chris, that are pretty expensive. And then there's other pockets that are still sort of okay. Even with either sectors, it's saying not all the sectors running, the stocks in the same sector all running in unison. There's definitely some outliers there. So it still feels like there's some opportunities around there. So it does really suit the trader here, actually. And I think, from a technical trading point of view as well, I think it does suit the technical trader as well, this market.
Well, that's always good to hear, especially when your background is technical analysis. You cover fundamentals too, but that's in relative strength is what you cover a lot of. You were talking about there are opportunities, there are outliers, there are other aspects of the market that better valued than others. You've just talked about the NASDAQ. The S&P is obviously less technology, more diverse, of a mixture and representative of the US economy.
Just on that last chart there, Chris, sorry, those sort of lows there, I see I've got sort of the arrows there, the October, December, March, October there. So they're all seasonal lows there, coming off the mid-term year low as well. So they're sort of the most likely lows for months, which was sort of identified, kind of a lot of those. And they've been sort of bang on here. And we do have a bit of a seasonal low here for these election years. Also the fourth years as well, to sort of, something in that May, June window as well. So that does sort of highlight some sort of weakness there, probability. So look, so far it's not, it's kind of lighting up, but it's not showing us a perfect sort of size like maybe some of the other periods there. But it is just sort of something to be mindful of, that's all. So, so like the market's probably a lot stronger than I thought it might be. So, so that for that reason now I haven't gone short. I was looking to reestablish another short here for a C leg down here, but it doesn't seem to be fitting in. So it's showing a little bit more strength than it should here. So that just tells me just to sort of sit back and wait for a bit more signal. But we just might get a bit of a sideways orientation here, so or pivot, just some sort of consolidation for a while.
And does that continue on for the S&P 500 as well?
Yeah, similar there. I mean, S&P's definitely had that sort of, more, I guess, pretty vertical sort of move there. Has sort of tipped over there. Look, the only sort of plus there for the bears is that it did roll off kind of, like kind of 3 weeks here. And I think we've kind of rallied up the sort of same amount here. So there is a little bit of, the timing is sort of hasn't gone to a new high in the same amount of time, so that does sort of bode well. There is a 41-week cycle there, which I was sort of, been watching pretty closely there, just sort of, off the high to low and then off the low to high. And then we've hit that this week here. So that tells me that could be a timing just to monitor for a possible reversal, but because it's not like an all-time high or an all-time, or, deep low there, it may not be as strong there. They can fade out sometimes as well. I find sort of the high to low back to the next high is probably more resolution, and then they can fade here, but can't hang our hat on that 41-week cycle. I prefer just to sort of look at the overall strength of the market there, but so far it's sort of hanging on, showing a bit more strength there. So just got to respect that for the time being here. But there is a possible turning date here for the US market there, and there's a lot of data coming out this week as well, Chris. So we could get some negative data there, which could bring the market back as well. So but the market has been stronger than it should have been. So Yeah, that's why it's sort of like it's a little bit unclear for me. Yeah.
Well, we move from the US and take our attention to the Aussie, which this is the one that you're talking about with the different areas of the market. Got massively overvalued things from a historical perspective, price to earnings, growth outlooks, yields, not really stacking up to the last 20 years, showing where opportunity really sits. The miners have been performing well. That's flowing through to the federal budget as sort of windfall gains from that perspective. And then there are some pockets where you say there is still some opportunity there, fundamental valuation perspectives. Putting all of that into the mixing pot, we end up with the S&P, the ASX 200, and this chart that we've got in front of us. So if you look at it from a technical perspective, what is this saying to you? And I do note you've already highlighted the lows that correspond with those in the US market too.
Yeah. Our market's been ex-messier, so been pretty choppy there. You know, like a lot of the indices broken out to new highs and really kicked on. Some of them came back for a retest and then moved higher, but our market's been, pretty very choppy here, not overly strong here, but also not showing too much weakness as well. We haven't had any really big pullbacks as well, so it's sort of just been sitting on top of that previous little high range there. So the one thing I have noticed there is the volume has dropped off considerably over the last sort of month, so it's probably 6 weeks there. So that kind of sort of suggests a little bit of indecision here overall. So pretty choppy environment there. So we're not getting any high conviction selling, but we're also not getting the high conviction buying off the lows either. So so it just means maybe we're going to be pretty choppy here. And those sort of sideways orientated markets are sort of common in the sort of high inflationary environment. And we've definitely, our inflation numbers have crept up quite a bit here. We've got sort of 0.6 to 0.8 to 1% the last quarter there. So that's not really going in the right direction there. So I think that'll just sort of keep a lid on our market there until that inflation starts to sort of come back down again.
So that's the Aussie market. The last one for the US main indices, the Dow Jones, much more concentrated indices, but still resembling the S&P in the sense that it went quite hot, continued to climb, had a pullback. We're looking at sort of 2-3 weeks down and then, 3 weeks up, sort of that symmetry that you're talking about. But at the same time, in that 3 weeks of coming up, it hasn't made it to the high that it was before it started that 3-week decline.
Yeah.
So anything new here, or it's following the same suit?
Yeah, it does look negative in the sort of short term here, but just the cycles this year just don't really call for anything deep there. So, the classic, the most common is to get a ABC, a 3-week pullback, but that doesn't always happen. That's the reality there. That'll probably happen, maybe 75% of the time, but 25% of the time we get other things happening there. We don't sort of quite get that. We might get more of a consolidation there. We might even get a series of high lows build up there, but it might just sort of, congest there. So just, with the price action being a little firmer than I anticipated there, I think it's more likely to go through some sort of consolidation here, Chris. So I think the 60-year cycle is the one that really is playing pretty closely. And even though that expanded out, went slightly higher, slightly lower there was a lot of sort of choppiness throughout that period as well. And there was a lot of sideways activity, multiple weeks there. We didn't seem to sort of go too far. So, we might just get sort of, we might get that type of activity here where, maybe the market will sort of go sideways here for the next month or two, not go too far at all. And maybe we'll see some rotation within the market itself here. That's what I'm probably leaning towards at the moment there. This hasn't been the ideal sort of weak B-wave rally. The volumes have been a little bit more robust than, if that was a clear sort of weak B-wave, the volumes should have been a lot lighter, and it hasn't been. And it's rallied a lot higher up into the range as well. So, it probably should have been weak if it's just a classic B-wave, but so it hasn't really done that. So it can still play out that way. Doesn't always end up being perfectly, but the odds are just more favouring some sort of consolidation here rather than a pullback here at this stage.
Okay, well, that leads us to looking at the trading shares this week. And we've got a chart here which has sort of, I'd love to say it's sort of more generally a base or a formation to get to where you are today. So what what's been constructive throughout this preparation to then catch your eye for what it's turned into here?
It's funny that the ALQ there, if you sort of if you look at that sort of on a longer term monthly chart there, you'd see that it actually rallied. I think it went from $4.50 up into $14 in a pretty aggressive manner, and then since then the whole thing's sort of gone sideways into this large, sort of triangular sort of tightening pattern, and within that sort of tightening pattern, we've seen a few tight consolidations as well, and we've got one sort of happening here now. I guess what I like here is that, off that last sort of low there in October 23 there, we had an impulsive move up, then a corrective decline, like a three-wave decline. The volume's pretty light, impulsive move up, and then the whole price action sort of tightening there. So just usually when you get a consolidation like that, you normally sort of, it'll break in favour of the trend. So how you trade into the consolidation, let's say 2/3 or 3/4 of the time you'll break out in the same direction that you entered the consolidation. Doesn't always. Sometimes they can break down, but the odds favour a break up here, and the whole thing's consolidated on a monthly there. So I think the whole thing looks pretty constructive. Here, longer term, weekly as well, we're definitely broken out of that consolidation there. So break out, come back, sit on top of the consolidation, and then go again. So this looks pretty good. There's some pretty good metrics in the ALS group as well. So definitely a pretty strong sort of company there. So yeah, I think this one looks pretty good. So can be not illiquid, but can be a stock which can be a little bit choppy at times. But yeah, overall, this looks pretty firm here. The volume was pretty good last week again. So I think if you sort of definitely break out of this pattern here, probably one worth following here. If I'm not mistaken, I'm pretty sure it's broken out here in the last day or so.
All right. Remembering that these reports are done Monday and sent out to Gary's clients on Mondays. We're talking about it on Tuesday. The next one in your list is corporate travel. You covered this in the COVID area a fair bit. So you looked at flight centre, you looked at corporate travel, you looked at when they raised equity, how their share performances were, and then also the full market capitalisation of some of these. So in comparison, you really looked at the whole sector. I'm just looking at this chart and seeing we're way down here. So when you were talking at the start of, you were saying, okay, well, you try and look for where the basing patterns are and the markers of when a company may turn around. I'm thinking of catching falling pianos and see that you've highlighted these lows and what the behaviour is in its low period. So is there a similarity between what we're seeing here in May 2024, what we saw in the October loans that you covered in great detail, and this previous low year as well? Is there a similarity?
Yeah, no, there is there. And it's also, Chris, not all stocks are alike as well. So, some can be sort of boring, sort of range-bound traders there. Others, I mean, it kind of reminds me, the corporate travel kind of reminds me a little bit of Elders. If you look at Elders over the years, Elders is a really strong trending stock. It tends to sort of go straight up or straight down. Doesn't seem to have sort of consolidations. Doesn't sort of have periods of going sideways. Just a really, really trending stock. So, but importantly, it's a little bit like a commodity there. If you're on the wrong trend, you can be hurt. If you're on the right trend, it can be really, really, really strong there. So with sort of Elders there, probably kind of break some rules in there. What I'm looking for there is to break I found with Elders oftentimes you get like 6 or 8 weeks in a row where it would just go to a new high and it wouldn't break a weekly swing low. And if it broke a weekly swing low, it would trend down for at least 3 to 6 weeks. So we'd always be trending for multiple weeks there. So you could just wait for a weekly range break and trade that, which is just a bit of more of a trend trading system rather than a fundamental system. But I've noticed here with corporate travel, something similar is that this is sort of a really sort of nice trending stock here. We're sort of getting like $3 to $4 or $5 moves each swing, so like a swing trading point of view. And if you look at sort of when it trends down, it doesn't sort of tend to break a swing high all the way down. So each sort of move down, no swing high gets broken here until eventually it does break a swing high, consolidates, and then trend moves there. So if we look at how the stock's traded in the past there, every time it usually trends down for quite a period of time, and then eventually it'll break above a swing high or two. And then once it's broken above a swing high or two, it'll start building here and start trending out the other direction. And again, it might be $3, might be $5, but it can be quite a big turning point. So I notice here that corporate travel here has broken above the two swing highs here just in the last week here. And there was a bit of a bounce on some pretty strong volume off the lows as well. So we got some good volume, just slightly lower here, so slightly higher here, sort of around that sort of Feb or March. And yeah, so we did go marginally lower here again. So, possible sort of little false break here as well on the chart. But what I like is that we did have some pretty strong volume off that low. Did break above two swing highs, which I think is a good signal just on its own. And now so looking for a little consolidation and then a break above here. So yeah, it's definitely one that I've sort of added a little bit in there, just a little starting tussle. But if it breaks above that, starts building consecutive higher highs, definitely one I'll try and look to add to, because it's just a nice sort of trending sort of stock here. So yeah, can keep it relatively tight here if I'm wrong. But yeah, also looking through the sector, Chris, Qantas has broken out, little BCP, gone to a new high. I think Webjet is trading pretty close to its old highs. A lot of travel stocks have actually updated here recently and actually been pretty positive. Even Flight Centre was, reconfirming sort of full year guidance there. So pretty robust from the sector in general. So it's unusual that probably what I consider being probably one of the strongest stocks in the sector, the only one not to raise equity and during COVID, is sort of down the lows here. So yeah, using a little bit of a fundamental filter there as well, but also using a technical filter to sort of get an entry. So I think this one's pretty interesting here.
Well, it's a move from corporate travel to Endeavour Group. So one that was also affected by COVID in a very different way. That best of the parts, the drinking side of things, the chart. We've got, looking at your chart, so faintly you've got the 0, which sits on the low.
Yeah, that's right.
And the 100%, which is the high. So this is where you look at Fibonacci levels and portion of the retracements. So is that factoring into how and what you're looking for from Endeavour at the moment?
Yeah, so we do have a potential base there, obviously a bit of a washout low there, and then we've sort of had a retest of the low, sort of high low, and then come back again. Woolies divested, bit of a stake there, so that's probably, maybe sometimes these things can hold the stock back. The people market knows it's coming, and then people are going to take that stock on as well. So, but it has sort of been building here now. So we've got our sort of second high low. So potential 0, 1, 2, maybe another high low would be constructive there. But do just like the tightening pattern here, and been a bit of volume here. So this is sort of like, I had a couple of Wyckoff questions there around the volume and so recently. So pretty interesting volume, because normally when you you should see, I guess what Wyckoff says, if you have a large range for the week where you go through a lot of price barriers, yeah, like that, then there should be big volume, because you've knocked out a lot of buyers and a lot of sellers in the market. So basically, if you're going down, you're just hitting all the buyers. So volume should be elevated. But if you have really tight ranges and big volume, like the last bar, then that tells you, okay, so what's going on here? That's a big price bar. Price didn't move that much, they're pretty tight. Is that accumulation or is that distribution? That's when you see people going to ask yourself those questions there. So the fact that we've sort of tightened up here, we did see some good volume at the last low there. Probably the first high low, some volume came in and reversed there. There was some decent volume out of that low. Then it pulled back, and probably light volumes into the pullback until we got notification here. And then we were seeing some big volumes there, but we didn't see the selling follow through there. So probably a critical junction here for the stock here. Supply is pretty interesting. So the whole thing's tightening up. And there's big volume there as well. So potential accumulation taking place as well here. So we definitely don't want to see it break below that trend line. But if we can stabilize here in the next week or two, and then start to tick higher here, this will be worth following. So, but just need to see a little bit more positive price action there and hold that range there. So that looks pretty, that's pretty interesting there to me.
Well, just on the Wyckoff, is this the anomaly? So if this is a large range and a large volume, that's expected.
Yeah.
Large range, large volume, so on and so on.
Yeah.
This is the anomaly that you're looking for, is it?
Yeah, the last bar there isn't particularly a large range, yet we have pretty big volume there. So that's unusual. So what's happening? That's when you sort of got to, sometimes you sort of got to ask you're looking for sort of things that often that should occur. Okay. Because we can have a small range and light volume, that's fine. But oftentimes when you see a massive volume there and a tight range there, that could mean two things there. Is that, that you might say, okay, someone's sort of selling there, but you've had that announcement there, and then they want to keep selling it there. But that market's really absorbed all that buying as well. Every seller is seeing it as a buyer as well. But so it basically means it's held really, really tight there. So whichever party's been more active in there, the other side's absorbed it. So
the putters have kind of held the ground, and they've absorbed all the volume that's been thrown at them by sellers, and then they haven't lost any ground. They've just been able to stand their ground and keep buying it at that price. Yeah,
so having Woolies sort of exit out of the parcel there might have been negative for some people, might have been a view. They're getting out, or they don't like it, or so it's kind of potentially some bad news there. So that's sort of caused some of the weakness there. And then you've had follow through the next weekend, but you haven't seen the share price move follow through. So that could be telling you there that that obviously the market's absorbing some of that weakness or uncertainty there. So just be interesting to see whether it can actually hold that line here. So the volume has started to drop here. So this week here so far is looking like going to be a pretty light volume week here. So we don't see the follow through in the downside. That'll be constructed for mine to holds that trend line there. So you almost want to see a couple of little tight ranges, not much activity go through, and then start to build there. Because then it's sort of almost like you're selling. It's just you've had Woolies exit, other people exit on it, and so you've had a lot of people exiting, but it's held nice and tight there. So that means that someone's absorbing that stock here. So, interesting from that perspective.
Well, that's a nice insight on the Wyckoff Analysts. If we move to Helios, different part of the market once again, this chart looks like one-way traffic, $5.20, $1.24, $1.25. The private hospital operator doesn't look so great, but you've highlighted a couple of things that we really love to see when you put them in charts. We've got some volume standouts, which just explained to us before, and then you got this lovely FB abbreviation. What's the FB for, Gary?
Yeah, the false break is obviously the FB is a false break here, but probably what's more compelling here is this sort of three thrust. So basically if you've been trending down for a long period of time, what they call like a broadening bottom or a run up, sometimes you see it with sort of BHP and Rio, they run up really aggressively, and then all of a sudden they start to overlap. That overlapping nature is actually a change of character, because obviously if you're trending down, it's not sort of, the highs and, each rally there stays well underneath. There's just no overlapping nature. There's just really one-way traffic there. But once you start to overlap, then you're sort of seeing each move down. It's only going slightly lower each time, and then it rallies back in the range again and goes slightly lower. So it's sort of basically sort of losing its downward momentum here. And oftentimes this overlapping, this broadening sort of low here, particularly the third one there, can be quite significant. So it is a false break as well. So it's like a second false break, but also this sort of three thrust sort of lows as well can mark a lot of lows there. You're looking for signs of accumulation, and we've clearly got big volume occurring down here at the lows there over a period of time here. So this is a stock that was ACL did make a take up a bid for the stock there going back a while ago, which obviously they were the smaller of the two there. So private hospital operator there. I do, healthcare's had its issues there, but I think everyone's got, sort of some fairly rosier numbers sort of from 25, 26 onwards. So always look a bit forward in the market here. So I don't know, the price action looking pretty constructive to me, although there's definitely got some risk there, some gearing with Helios. If it does get it right here, there's definitely some upside in this one here. So probably a little bit more risk than you might want to take with some of the other, the top 200, 300 shares, but this one's probably got a sweeter reward as well. If PLS can get itself right here, this is one that really sort of performed pretty well here. So, to me, it's probably, one you trade a bit lighter, Chris, maybe sort of build into it. But yeah, just some encouraging signs there, I think.
Nice. Well, we've got another one, different area, more in a similar space to Endeavour in the sense of it's not necessarily gain, but in that leisure niche. And we've talked about this as being somewhat recession proof, or quite possibly works better in a recession. People are more wanting to win lotto. We've got this real consolidation here. So you've had this nice spurt, this impulsive move, come back down and gotten tighter and tighter. And then since you first started reporting on this, we've got these really tight ranges. So closing right near where they opened the week. How do you interpret this congestion, this compression that's happening right here?
Yeah, look, the last two things on the chart is obviously we've had that pretty impulsive rally there out of that sort of early 2020. But yeah, so really, when it got coming there, went up in a really fast manner and some pretty good volume. And then it's pulled back there on some much lighter volume there. I would prefer to sort of see that be a little bit more sidewaysy rather than it has come back a little bit deeper. But really, it'll probably come back the same amount of time now. So what do we, we might say we're 1, 2, 3, 4, 5, 6, 7 weeks up, and we've probably come back at least 8 or 9. So probably the same amount of time that we've gone up from the low, we've now come back down into the pullback, and we've probably come back half the range. So really, just that's sort of telling us there that it's finding it easier to go up, and much more of a struggle on the way down. The volumes are basically confirming that market wants to go with it when it runs as well. So come back, set on top of the previous high there. So this is a bit of a really important support zone there. And so far, it's actually been holding here over the last couple of weeks, and the volume has started to increase, which is exactly what we should be seeing if we're going to see some accumulation and stabilise here. So I've added some into the model portfolio here. This is definitely one that I would add here. I think it is a bit of a recessionary sort of stock here. Pretty simple business or pretty decent margins. Not complicated to work out this sort of stock here. So, I think it looks pretty constructive there overall.
And the last one for this week's report, we're going for property technology. You've talked about it the last couple of weeks about how they've expanded into the UK, the benefit of that, possibly the first mover advantage of the bank, but then a quick follow-on succession of the other participants in that industry to get on from PEXA's perspective, quite possibly signing on a few other banks in quick succession. And that may be reflected in the share price here. That's similar enthusiasm that you have for the prospects of them broadening the horizon, because they're already fairly well saturated in the Aussie market. As I've just stolen your thunder from the last couple of weeks of fundamental background, what are you looking at from PEXA now?
Yeah, look, I did buy a stake here on that announcement. I thought that was a pretty cracking news there. Did sort of see it late in the day rather than early in the day. Would have been nice to buy it off the hop, but still, good game changer sort of trade there. Still sort of generally will show sort of strength there. We've seen in the past there, 360 MP1, just sort of treasury wise. There's just been quite a few of those sort of game changing news there where the stock does jump up a bit, but then just continues to sort of keep climbing there. So that was always the news for PEXA there, but it has gone up 8 days in a row, Chris. So it's had a pretty cracking run here already. So, so to me, it's either going to keep going to 16 and then pull back, or it might pull back here and maybe consolidate top of that high there. That'd probably be better if it sort of consolidated back here and went higher there. So maybe it grinds back towards 14 or something, or maybe it does something a bit tighter there. But definitely think this is sort of, some good volume out of that low there, just good news as well. So this is sort of what I'm looking for, some sort of consolidation there to pull back, and I'll probably add to it. Actually, I do think this can, potentially go a lot higher here longer term. Look, bit of a view there as well in terms of sort of what's happening. Just reminds me a little bit of that computer share going into the US market there. What PEXA have done here is going to be sort of game changer for their market, but also potential game changer for the company itself there. So price action so far is pretty positive. So like what I was saying there, but I'd love to see some little high type little flag, a little consolidation, maybe just sitting above 14 over the next week or two there, and that would be, nice little add there. So just want to keep an eye on there. I think you'll probably get hopefully you'll get a better entry here if you haven't already got one there. But just one to sort of wait for a bit of a cool off there. But I think that still looks pretty good here longer term.
Nice. Well, they've a few trading shares to look at and a bit more understanding of what you look for when we see these basing patterns etching their way out and how you identify them climbing up the other side, which is potentially a breakout or leading to a breakout. So it's really good to share those insights with us.
Yeah, I think in the past I'm probably too quick to buy the lows, and then with experience there, sometimes you're actually better off waiting for a few higher lows to sort of set up, then come in there. It doesn't always happen. Sometimes those good companies, V-shaped lows can just blast out of them. That does happen. But yeah, oftentimes, you get a chance to sort of build there. So, maybe just, starting small sometimes, and then maybe, as it starts to build, then you can build in the position there. That's probably the right maneuver there. Tactics.
Well, that is really helpful, especially when I'm trying to pick companies that have been underloved, out of favour, and are taking the valuation perspective from the fundamental avenues that we looked at. So at that point, we say thank you very much for sharing, Gary Glover from Novus Capital.
Thanks, Chris.
Gary is speaking tomorrow night in Adelaide for the Australian Technical Analysts Association. You can go and see him there, see him live, and we'll also put in the notes below the link to that event. And Gary's talked about things like the 0123 bottom, Wyckoff and springs, false breaks, volume analysis. There's a whole playlist on the right, along with the Friday report, momentum, relative strength that he's talked about. Finally, you can see his X or his Twitter handle over there on the left. A lot to look out and watch for Gary. We look forward to hearing how tomorrow night goes.